You sound great, Romulus.
All right, yippee skippy, let's rock and roll, shall we? What do you think, huh?
I'm ready to
The
go.
word out
I
there?
missed you last week. How did last week go? What did you talk
Oh, it was
about last
fun.
week?
Yeah, we were talking about Tesla and
Okay.
as the news generated some interest over there.
Okay.
And today we got a couple of cool things to be going over these meme stocks and
Oh
new
yeah.
highs in the indexes and, nice, nice
Definitely a
little
lot to talk
talking
about.
points. Oh, all right. Anybody going to Red Lobster before they shut all the restaurants down?
I don't think I've ever been there. I'm sure I'd love
I
it
have
though.
not been there either,
So
but
I don't know. That's probably why they're bankrupt.
yeah, a couple in my city are marked for bankruptcy death. I think they're leaving one open for now around here, but that could change, of course. All
What
right.
usually happens in that scenario? Does like another restaurant take over? Do they like? I'm sure they don't destroy the building. Like what happens in that scenario?
Oh no, I mean the buildings get vacated. In this case, there's a kind of a bankruptcy auction company that
Okay.
specializes in restaurants that started auctioning off Red Lobster kitchen equipment on Monday, actually.
Oh, okay.
They've already been doing it for a couple of days, and really, it makes sense. Like if I were opening a restaurant, the restaurant industry has such a high failure rate,
Yeah,
open and close rate that
costs a lot.
I can't
Food
imagine it would make
spoils.
any sense. And I'm not a professional in the industry, but I just can't imagine it would make any sense to buy brand new equipment across the board if you were opening a restaurant because there's got to be so many of these auction things out there.
Yeah,
And Red Lobster wouldn't be a company with crappy equipment. I mean, they would probably have good stuff.
yeah.
Uh, You know, anyway.
That's interesting though. I
So
didn't know that. That's cool.
yeah, yeah. Uh,
I'm gonna make an
so
announcement real quick in the Discord.
oh yeah,
Get
that's a good
people joining
idea.
on in.
Come on and come on, come on. Yep, join us.
And type in the chat what you guys want to learn about today as well. What brings you to Trader Town Hall? Why are you
Yeah,
here?
you guys can put your questions in there. We'll see them for sure
Yeah.
as we get ready to kick this one off. And the traders town halls are always fun. We've been doing this for a little over a year. We enjoy it, and they're a little shorter in nature. Of course, there's always things going on. I've got a couple things to go take care of. And for the Centurions that are with us, there's a few of you I see. A couple of new folks, a couple of new faces. Great, welcome. But a few of the Centurions that are in the Victory Unit Legion. Uh, Legatus Greg will be handling the T&L tomorrow. I've got
Yeah.
a convention I've got to get to. I've got to leave early tomorrow afternoon for that. So I will be out of town tomorrow afternoon until Sunday night for that situation. Yeah,
That'll be fun.
so okay, good. And just heard from Brandon about an hour ago. He was
Oh.
moving about the country, taking care of some things for family. So he was
Yeah.
checking in, and we had a good time last night on the Victory Unit
That was
podcast.
great.
And
I
that was
really enjoyed
fun.
that session.
Yeah, that was a fun gathering. And he'll be doing it whether he's in his home base or not. I'm sure he'll be hosting it again tomorrow night. So he'll be sure to check in 7
He
o'clock tomorrow
he will
Eastern
not be
for
hosting
the
it
Victory
tomorrow
Unit.
night. Huh? There will be no
Yeah.
Victory
So,
Talk podcast tomorrow, but there
oh
should be
no,
next
he's already said that
Thursday.
he won't be doing it.
Yeah, he said he wouldn't be doing it.
Okay. Well,
Yeah.
all right. Like I said, he checked in a bit ago, about an hour ago, said he was taking care of some things and moving about the country doing some stuff. So, okay. Well, that explains that. Now, so here on Traders Town, we try to get a couple of, one or two more specific topics per week as opposed to, of course, we'll handle any of the questions that come up, but as opposed to kind of wandering around the entire market landscape. Um, Sometimes that's appropriate, but for these sessions, we try to kind of zero in on a couple of specific things, one or two specific things, and hopefully that does help. And there's two topics that I want to be going into tonight. So we're retail folks here. None of us are managing, institutional money, working at pension funds or hedge funds,
Yet.
endowments at universities or nonprofits or those kinds of things. So we're just, moving I'm moving my own money. Greg's moving his own money around. You guys are moving. We're considered the retail crowd.
Yeah.
Okay. That's what we're all a part of. And the retail crowd has been getting some attention this week, starting Monday morning with the GameStop launch here, pushing the stock up a couple of trading days ago. And the conversation was around, is this a meme stock craze, 2.0, or are we seeing another version of this? Is this going to go on for weeks and months like it did last time and everybody makes all this kind of money? And you can see that already it's not. Okay. Already it's not happening. GameStop touched 31 today, down from 64, so it's already lost 50% of its value. It did jump, of course, but here's the crazy thing. These are all retail crowds. Like institutions, they're not in here. They can't be in here. I mean, their mandates, what I mean by mandates is their investing rules that they have to follow don't allow them to trade stocks like this. So they're not in here, okay? This is all Reddit, retail kind of crowd going in and out of these things. But somebody bought it up here. And not just somebody's, okay, because the volume was huge. It's averaging average volume of 18 million shares a day.
Jeez.
Yesterday it traded 200 and let's see.
Wow. So 10 times our vol, 10 times the normal volume.
Yeah, like literally 12 times the normal average volume yesterday. So people bought it up here.
They just had
a lot of
market
people,
orders to buy GameStop. So they're like, it's going to the moon.
Going to the moon. A lot of retail people bought it up here,
It's risky,
and maybe sold it here immediately today after they. This kind of thing. Here's how Greg and I have kind of taken the road here with this stuff. Whether it's Bitcoin, cryptocurrencies, or GameStop. We'll look at AMC in a minute. A lot of these others that come and go. Is first of all, it's gambling. Okay, it's not investing or trading.
And the reason for that. Why it's gambling is because it can halt. And when you're halted in a position, it can just gap down massively against you. So it's not like regular trading where you can buy breakouts or buy a dip or something like that. You can get halted in a large position and then your money's gone. That's gambling.
Yeah. Well, yeah. Or you can just buy it up here at 60 or 62.
Yeah.
And then it's down at 30. You're like, oh, I made a mistake. You sell it, you lose. You've just lost half your money in a day. Okay. Oh. Just like lickety split like that. So anyway, gambling. Now gambling, so right, people gamble all the time. DraftKings and all these other casino and sports betting apps have made a business in the last couple of years after the Supreme Court changed the understanding of the rules. And most states. I live in a state where you can just open a phone app, a DraftKings or a FanDuel or MGM, and you can bet on sports. And you can bet on other things. That's somewhat recent, just the last few years it's been allowed. So gambling is a big, but just like gambling, if you put, $100 on the Knicks and they don't cover or they lose or whatever, you didn't win your bet, you lose the whole $100, right?
Yeah, instantly gone.
You lose the whole 100. You don't lose half of it or most of it or part of it. You lose the whole $100. So when it comes to these kind of things, GameStop, AMC, or Bitcoin, think of it like I can lose half my money or more, or the whole thing, like a gambling bet. That's the way you got to think of these kinds of things. I could lose the whole thing, and then you say if you're okay with that or not.
Yeah.
You follow the thought through
before you take the trade, just as before you gamble, accept the loss first.
Right, there you go. And you don't do this to construct a viable long-term IRA or retirement account strategy. Okay. That's not what these things are for. You want to do that, and we've talked about this. You buy this stock, you buy these yield max type of things, that kind of stuff. Okay, you buy things that maybe pay a lot of dividends, or you put smaller dollar amount in Nvidia because you get the growth aspect of it. That's how you structure that kind of stuff. You do not put your money in a big fashion in these kinds of things.
No.
Okay. Because there's going to be stories. Oh, somebody they put $100,000 in a GameStop a month ago. They sold it at $40, $50, or $60, and they made $10 million. Great. That's going to be a very rare. That's like hitting a lottery.
Yeah, Romulus, I was in the Lifetime locker room and there was one guy, he said that he made $20,000 overnight on GameStop. And his group of friends were like, "Oh, did you sell?" He's like, "Nah, man, I'm holding." He probably just lost like half of that today.
Yeah, he did lose half of that today. So the stock dropped by, all that money down from the highs. So yeah, you're going to hear a couple of those stories.
Yeah, that's the story.
But none of those people are Bill Gates or Elon Musk or Jeff Bezos from Amazon or, Warren Buffett or, some of the traders that I know that I personally aspire to become, making $100,000-$200,000 every few days in trading. Those are not those people. Okay.
No.
Those are not those people. So use it as a gamble or use it as just a small dollar amount. You put $500 in, you put $1,000 in. You're like, if I lose $500, I don't care. I'm all right with that. Maybe I make a few grand. Great. Do it. Yeah. That's where it ends, though. Okay. Just use your use your logical brain when it comes to this kind of stuff. So let's look at AMC as we're discussing this.
Sympathy meme stock.
Yeah. AMC this morning, right back to where it was just a month or two ago before all this craziness launched. Now, why did AMC get hit harder than GameStop? First of all, let's explain. Let me show you guys something here. All right. Hang on. I've got to switch screens after I get the screen set up, so give me a moment. Finance. And I'm going to show you the short. Hopefully, you guys remember the GameStop thing from a couple of years ago that started a meme stock idea, and it was because the thing was so heavily shorted, okay? That's what did it. And we'll explain that. So this is a good topic for today. And I have one other topic that we will get to. Okay, that'll be a good trader town hall situation. I like this. All right, let me stop the screen and I'll share it here in a minute. And you should be able to see a Yahoo screen. Greg, just give me a thumbs up if you do.
Yep, you're on Yahoo Finance.
All right, good. So Yahoo Finance, a free place for you to get pretty reliable information. It works. So what we're showing is GameStop, and we're showing the short activity in GameStop. At the end of March, there were 65.5 million shares that were shorted against GameStop. At the end of April, there were 64.37 million, so it dropped by a little over 1 million shares. This is, again, before all this, this recent stuff. It dropped by a bit. And as the percentage of shares outstanding, which is this line right here, it's 21%. Percentage of the float, 27, almost 28%. And if you have further questions about these numbers, we can answer them in a bit, but I may answer them now. Every company that's public, that's a publicly traded company, has a maximum number of shares outstanding, which is this line right here, 306.18 million shares.
So that's the total shares in supply, right?
The total shares. Now, that's the total shares in supply, but that may not be the total shares that are allowed to trade because, for example, the CEO may own 10 million shares, and he can't trade those like you and I can just buy and sell.
Yeah.
He has to hold them for a longer period of time. Or they may have some of these shares that are away in their treasury still, that kind of thing.
Okay.
So what you look for is the float, which is the difference between shares outstanding and shares that cannot be traded instantaneously like you and I can. And there's looks like a couple, a few million shares, 40 million share difference over here.
Okay, yeah.
Okay. Almost 40 million share difference. And the float is what we can buy and sell every single day.
That's
now, right before GameStop lit up in early 21 from the Reddit stuff, the original meme stock short squeeze mania, the percentage of shares outstanding that was shorted on GameStop was like 68%.
Jeez.
That's the highest number that I've ever seen in my career.
That is a lot. And
it is a lot. It was over 100%. Every
short seller is a guaranteed buyer. Every single short seller is a guaranteed buyer. It just depends on what price they have to buy their shares back at to get out of their position.
Unless it goes bankrupt. That's the only way that they don't become a guaranteed buyer.
That's true.
Okay.
That's a good point.
What happened in 2018, 17, 18, where hedge funds started shorting GameStop, and I'm going to use the old pricing because I don't know exactly after it split and all this recently. But they were shorting it at like 40, 45, 50, $55 a share.
And they just kept shorting it, and it just kept going up.
Obviously, they kept shorting it, right? It became the most heavily shorted stock on the exchange eventually. And a registered investment advisor out of Massachusetts who goes by the name Roaring Kitty discovered that the stock was so heavily shorted. And he knows that if a stock that is heavily shorted starts to go up on its own, like for any reason, name it, good earnings, some positive announcement for a contract or sales, anything at all, that the people that are short might think, oh my goodness, I'm short this thing, it's going up, I'm losing money, I got to get out of it, which means I've got to buy it. It's already going up on natural buying. Like people think the earnings were good or the new contract they signed to sell more product is good, I'm going to buy it. Okay. Now the people that are short are buying it because they don't want to lose any more money than they've already lost. So over time, from 18 to 20, GameStop dropped from 55 roughly down to in the low single digits, like $3, $4, $5 a share. Yep. And that's when this guy started buying it, and he went onto Reddit, started saying, hey, this thing is the most heavily shorted stock out there. If we all get together and buy a little bit of it each, it'll run it up, and then they'll get squeezed. The people that are short, the hedge funds that are short, will want to buy more, buy it back, and it'll push it up even more. Yep. And that's what happened in here. But the shares that were shorted was way, way higher than what you see today.
Yeah.
Way higher.
It's much different today. So basically the people that think that it could potentially do a bigger squeeze or the same squeeze, it's not as likely because there's less shares that are shorted.
Right. So this is still high by exchange standards, 21% and 28%. Yeah. Almost. This is still high, but it's nowhere near what it was before. Like a low number, like a Microsoft has like less than 1% shares shorted against it. All right. Yeah. I mean, who's going to short Microsoft in size right now? Like, who's really going to get after that? Okay.
Nobody has the balls.
People, the hedge funds short these companies because they think they're going bankrupt. They don't want to cover. They want to short it at 40 or 50 and ride it to zero.
Yeah.
That's what they try to do.
Fundamental.
They try to ride these things or like a buck. Because, at a buck, and when they announce bankruptcy, you have shares that trade still for a while at around 50 cents or a buck. That's what they try to do. Yeah. Well, this is nowhere near as heavily shorted as it was a couple of years ago. Now, AMC, let's look at that one because this has been running too the last few days. Here's AMC. Okay. And you go down and see the shares that are shorted here, and it's 20%. So it's even lower than GameStop. Yeah. But one thing about AMC is the number of shares shorted went up dramatically over the month of April, from 42 million to 55.5 million. Quite an increase. Quite an increase.
They're trying to short probably in anticipation of bankruptcy, and just at that moment, that's where they got squeezed.
That's when they got squeezed. Yeah. Okay. So next month, like I would feel, it's my opinion that this share short at 55.5 million is probably less now, because when you cover, then your number drops. But the exchanges don't have to report this information except once a month. So there is no way. I know that websites and other companies try to sell data that there's no way to really accurately know the change in a short position except what is publicly released once a month. Like no one in the world except like the people at the exchanges and the companies themselves know what the real numbers are. So don't let anyone tell you that they know. They don't know. I promise you they don't know. Okay? That is not publicly available information except once a month. All right? So when you can go to... All right, everybody got that so far?
Yeah, any questions? This is important stuff.
Yeah. All right. Let me show you another stock. This is a stock that Greg and I have been trading around for a while. All right. This is a real company, by the way. See, GameStop and AMC will most likely, by my analysis, be bankrupt within the next 3 to 5 years. Okay. The company I'm showing you now is a real estate trust. It's a realty trust. Therefore, they have to pay out heavy dividends every quarter, and they do.
Pay out like 90% of their profits to shareholders.
Yeah, it's like 80 or 90%. It's a big number.
Yeah.
Okay. Big number that they have to do. And by the way, you look at the debt, you think, oh, they got $11 billion in debt and a $2.8 billion total valuation. But realty companies typically have heavy debt, okay,
Yeah.
because
It's a part of
they
real
use
estate.
that debt to, they lend that money that they borrow to people that own, manage, and rehab like multifamily houses or small strip malls, those kinds of things, warehouses, that kind of stuff. That's what they do with the money. So they borrow money and they lend it out again to other smaller operators, and they make the spread of the difference.
Yeah.
All right. But here is a company with some monster short position.
Wow.
Yeah. 39% almost on the shares outstanding, over 50% of the float. This is big. Yeah.
That is insane.
This is big.
I didn't know it was that high. I thought it was like 20 or 30%. I'm
Big.
glad we checked. Double checked.
Big. Okay. And this is one of the reasons. There are other reasons because there has been heavy insider buying in the past 15, 16 months in the company that has gotten my attention. But so I have to reverse my screen share. Just a second. Hang on.
That's like a breakout buy setup then. Because if we start to break out on volume, those sellers, they have to cover.
Well, here, look at this though. So,
Yeah.
got this in my IRA, for a while. The Legion, we talk about this a lot. We do cash secured puts. We've owned it and sold covered calls. We've been doing this for almost 6 months, and it's just been a real home run stock for us. Okay, last week
average cost is like $12.50, I'd say.
Yeah, last week cash secured puts that expired worthless, meaning that we got 100% win on that. Mm-hmm. This week we did it again, and I don't know, probably go worthless on these as well. Yep. You got a few more days, but probably go worthless. But anyway, this is not a stock that typically trades wild ass shit like this. Although because it was so heavily shorted, I've always expected that something like this could happen.
Yeah.
Like it's in the back of my mind because again, it's so heavily shorted. So this stock has nothing to do with the AMC, GameStop, meme stock craze. But I'll show you in a minute what else happened or why it happened. So the stock goes up 2%, then 5%, then almost 11% over a 3-day period of time. Big move.
Yeah,
okay,
that's
it's all because of the GameStop thing.
Yeah, do you think the short sellers got nervous? They saw what was happening with GameStop. They're like, I'm out. I'm out.
Yes, I do. If they're smart, if they are thinking correctly, they would have done that. Yeah. All right. So by the way, when the stock is down here at the low 12s, it pays a 15% annualized dividend rate. 15%.
That's pretty cool.
And you can sell covered calls on this every week because it has weekly expirations.
Yeah.
You don't get much for them, but over the course of a year, you collect 15% cash on the dividend. You sell some covered calls, make another 4, 5, 6% depending on the week or whatever. Yeah. And then you might get a little stock. You can make 20, 25% on this stock. And now, of course, a lot more because of the recent move.
Yeah.
All right.
Yeah, I'd throw like 10 grand into this and just boom. See you at the end of the year.
Yeah. My covered call selling happened here on Monday. It happens every Monday. But I would have gotten a lot more if I waited a day. But that happens, right? You don't know for sure.
I got
you
the
just kind of go with
50 covered call, so that should be safe.
Yep. All right. So that got caught up in it. Now I'm going to show you something else. Hang on here. Let's see. How do I do the? Give me a minute. I always got to go to the page and then. So this is how and why this stuff happens so fast. And next time you see a short squeeze kind of thing, you can do the same thing. All right. Hang on with me.
Shorted stock list. Ooh.
All right. Let me go and show you this. Okay. So all I did was just do a search, internet search for the most heavily shorted stocks. See? That's it. That's all I did. All right. Now the data in here is not all the way 100% accurate, but it'll get you started. And that's all that happened yesterday or the last couple of days with ABR was people just saw GameStop and read about, oh, they're doing another meme stock. I want in. What are the other heavily shorted stocks? Let me go and buy those.
Yeah.
So that's what happened.
Yep.
That's why they all, we'll go through the list here, but Here you have,
MPW.
so it shows you the,
Beyond.
it should show you the percentage of short also. I don't see that here.
Pulse, okay.
Um,
iRobot. AI.
Hang on. Yeah, that's a weird one.
AI. They got a really good ticker symbol, AI.
AI, yeah, that's heavily shorted.
Isn't outperforming.
We've done cash secured puts in that one as well a couple of times.
Yeah, you have 100% win rate on AI.
And that most shorted stock. So it's not showing how heavily shorted they are on this particular. Oh, here's ABR. Here's my guy ABR.
Okay. We can always go back to Yahoo Finance if we need to.
Yeah, here's ABR. That's one of the top. So 1, 2, 3, 4. It's the 5th most heavily shorted stock out there.
Wow.
All right.
Which side's gonna?
Now let's do this. Let's just write down a handful of them. I can flick back and forth.
I also made a list in the trade ideas section for the Legion. I also created a scanner through FinViz on how you can search for them.
All right. Yeah, FinViz helps too. Okay, so you should see Beyond Meat. Boom.
Yeah,
this is it. You see that?
Yeah.
See that? All right, let's
During
go to a
the
few
Legion
others.
Live, I noted a quick scalp trade from 950 to 10.
SMFL. SMFL. This one, I don't know what's going on here.
MPW, Romulus. I'm curious to hear your thoughts on MPW because that one pays a decent sized dividend as well. But I haven't done any fundamental research on it.
Well, look, though, I know this. It ran recently because of this thing.
Yeah, definitely.
That we're talking about, right? And you see how they all the stocks went down today? All of them?
Yep.
Right?
Birds of a feather
Kohl's
flock together.
Check. Yeah, that's right. Kohl's runs and then sells off.
Kohl's interesting.
Right.
The question becomes, are these a breakout and then a retest, a hold, and then another breakout? Or does it just fizzle off into nothing? That's the $1 million question.
Yeah. You have a lot of medical companies, biotech stocks on here that you don't want to mess with those.
Yeah. Manipulated.
Yep. So here's AI. Boom, boom, boom. Runs up because of that. It didn't fall down today, but it ran up.
Yeah.
So that's how you do it. Okay.
Novavax.
Now you don't want to hold these things. Like I said, gambling, quick trades, all that kind of stuff, because
take money on the pops.
In another week or two or a month or two, they're all back down to the, $1 or $2 or $3 a share. And everyone's kind of wondering and reminiscing about the good old meme stock days of May of 24. That's how fast this stuff can come and go. All right. And there isn't the oomph out there like there was in early 21 to maintain this thing for weeks and months anymore.
Yeah.
It's a different type of environment today. People want Nvidia, people want Microsoft, people want big cap tech. That's got oomph, but they don't really want the little stuff beyond these little flashes. Yeah. So you got to be really careful about that kind of stuff. So, all right, that covers it. That shows you where to find the information, how and why this stuff happened, and if you see a little spark again, you can go ahead and run around that stuff yourself. I mean, you can look at one of these heavily shorted stocks and you think, oh, maybe I'll buy it if you do a little work and you sell some covered calls every week. Well, that's what I've done with ABR. But like I said, ABR is a real company. They have, they do big revenue. They have a lot of earnings. They pay out a huge dividend. They've got massive insider buying over the past 15 months. A lot of these companies are not real companies. They're going to disappear. It's just a matter of when, and for a lot of cases. All right.
That's a good tip.
Right. Good. Okay. So let's see if we have any questions about that before we go on to something else.
Yep. Any questions so far? You guys just listening, absorbing the knowledge?
Yeah. All right. Good. Okay. So next thing here, then I got to screen around. So you see the mark, we were talking about this a little bit last night too. Market's going up since April 19th till now. So you got a couple of weeks of an advance, almost a month or so. And especially right in here, volume is not running above average at all during this advance.
Yeah, still under
Matter of fact,
under average.
Even today, Even with this big, new all-time high close today, volume couldn't even exceed the average. Okay, you look at the triple Qs, yeah, it goes up, but it doesn't even get near the average. Okay, this is new all-time highs, and not even. This is a very sketchy scenario to be owning a bunch of stocks and long stocks and thinking, hey, I got this. I'm at a new all-time high, and everybody's with me, and this is going to go a lot higher. This is a high-risk proposition, is what it is.
And
I've always been leery of breakouts, things going up when they go up on consistently low volume, and it has worked well for me for many, many, many years. Because you don't have any gas in the tank. If the institutions are so interested in this, where are they? Why aren't they buying hand over fist? Why aren't they charging into this market with reckless abandon and just buying like crazy? I don't see it. You don't see it. It's not there. You do have to be a little extra cautious for that reason as well. I don't think that it's going to be a situation where we get consistently sustainable upside moves from here over the next 3 or 4 or 5 months, unless the volume starts to come back, and that just doesn't seem to be the case yet. I mean, they've had plenty of time. They've had plenty of time to buy, and they're still not showing up. So you got to ask yourself why. You got to ask yourself why. Why aren't they showing up? What's going on out there?
There's also a bearish RSI divergence into the new high, which just makes it also riskier. And of course, we could blow through the divergence, but you got to just pick your spots carefully. I'm still on the long side, but with relative strength names, and I've also, I'm on guard for short setups as well on relatively weak stocks.
Good thinking.
I was at a CMT conference a couple weeks ago, and the presenter, she was talking about volume and how it's changed nowadays, and how a lot of the volume is now like dark pools and like algorithms, and it's really tricky to get any reliability on the volume. Do you have any thoughts on that, on just like how volume has changed over the years, or over your investment career, Romulus?
Yeah, I don't know the specific reporting requirements, but I believe if a trade gets done, dark pool or not, it's got to be reported.
Yeah, that makes sense, right?
Like, I don't think that you can do a trade, like Goldman and Morgan Stanley on behalf of institutional clients without calling the exchange and saying, hey, we just traded, 2 million shares of Meta and Google. Yeah. Or, I don't think that's I think you have to report those. So it would show up. It would get reported. Yeah. And be in the soup. But still, you're comparing apples to apples here, regardless of what has changed over the many years.
That's true.
When you just look at the last couple of months. I mean, you're seeing that this rally is going up.
It's summertime.
And it's not going up on a volume surge. That's pretty simple. Yeah. All right. Any more questions?
Are these live calls only on Wednesday? Yes, when it comes to Trader Town Hall. In the future, we might change the schedule, but I don't see any reason why we would. Is there day trading sessions? Yeah. I go live Tuesday morning to day trade. Yep. Tuesday mornings, once a week.
Yeah, you can do that. You get in the Legion. You can join up. You can.
He's in the Legion.
You can check that out. There you go. Yeah. Good.
Ashishiko, welcome.
Yeah, sure. Absolutely. Okay.
Yep.
All right, good.
We have Thursday Night Live tomorrow. Will AI beat the markets? That's a good question. I bet human plus AI will beat the markets, but it'll take some time before we get to that point.
Will AI beat?
That's just my opinion,
because AI is programmed by humans and all that. So
yeah, AI plus human is greater than AI and greater than just human.
Look, financial industry professionals have been using AI for over 20 years.
Yeah,
it's only in the last year and a half that it comes into the public mindset, but this has been around in the Wall Street industry for decades. Okay, decades. And we use a combination of this for, I don't remember a time when I didn't use a combination of this stuff.
Yeah.
I can't remember. I mean, even way back when I started, we were using forms of AI and that kind of thing in the late 90s. So it's always been a part of what we do here and how we do it.
And also, what do you mean by will AI beat the markets? Like, what do you mean by that? As in,
Probably
In what
just
way?
turn a computer on and let it run and tell it to,
And then
perform.
generate a ton of profits.
Yeah. And that'll get played in, it'll get played in and played out, just like everything. If you look at things like the January effect or the October uh, stuff, or all that kind of thing, they get played into the markets, and the institutions and the AI stuff and the computers start to front run it and play it at different times. October used to be the weakest month of the year, then it's September. It could be August right now as they get in front of it earlier, all that kind of stuff. So.
Castro asks, what do you guys look for the most with new stocks to swing trade? Do you want me to take over this one, Romulus? I got a cool answer.
Yeah, sure.
So I really like to pick stocks that are relatively strong. So I'm going to show you my screen real quick. And right now we're on the daily time frame. And this is ABR. ABR pretty much sideways, but once it starts to break out, okay, that can be a stock that I might consider swing trading. I also would only want to swing trade stocks that I wouldn't mind potentially investing in. It's not so much the main goal, but I just feel safer holding a stock overnight if it's an okay investment. So that's an example. Another example could be something like Nvidia, where you have like just, a sideways consolidation and then a breakout. You get a breakout in price, a breakout in volume. I'm not going aggressive on something like this. I'm doing this with small size, like 1% of my total portfolio. And I just take profits the next day, just quick cash flow. So basically what I'm looking for is just what's the overall trend? Is it something that I don't mind investing in? Is it fundamentally strong? Is it relatively strong? And is there some way that I can buy it and manage my risk? So with gold, I bought call options right over here once we started to break out. And my stop loss on that call option can be right underneath the total, kind of like pennant guy right here, this little bullish wedge, bullish pennant, whatever you want to call it. So find an area where you have good risk to reward, a relatively strong stock or market, something you don't mind investing in, and, manage your risk.
Yeah.
That's all.
Sound good?
Sound good?
All right. Okay, excellent. Well, we'll wish you guys a great night. Like I said, Centurions, I'll be gone tomorrow. Greg will be taking over. You guys have a great rest of your week. For those of you who are new to us, welcome. Appreciate you coming.
Yeah.
Look forward to talking with you guys again in the near future. Everybody have an awesome night. We'll see you soon. Bye-bye.
Take care. Peace.